Meanwhile, recently, red-hot gold pulling back in a big way today. Prices settling down nearly 6% for their worst day since 2013, April to be specific. The precious metal hit its 49th record of the year just yesterday, and even with today's pullback, is up 56% this year. We're just back to, I think, last Monday, basically. The gold miner ETF down more than 9%, its worst day since 2020. So what about this hiccup?
The gold mining makes sense 100% in terms of being twice as bad as the underlying commodity. We've seen that before because people are now terrified that the gold move is over. We had talked about recently, the RSIs were historic levels north of 90%. I mean, the overbought conditions, again, were historic on a number of different metrics. So this was coming at some point. Now, I thought it was coming in the form of an equity market sell-off where all risk assets would go lower. That obviously is not the case today. So something else was going on. I'm not exactly sure if maybe people got out of gold into Bitcoin. I will say it again. This is not over by any stretch. This is a healthy pause and a move that I think will continue over the months to come.
Yeah, I agree with that. HSBC and Goldman Sachs still have a $4,600 to $5,000 price range or price target for gold in 2026. I think it will go higher. But think about where we are seasonality-wise. First of all, everything that guy said, we ran up, probably should take a stutter step back. November, December, positive months for the equity market, pretty bullish months. Maybe, just maybe, people want to get out of that and get into equities. Maybe they want to get out of that and get into Bitcoin, as Guy said. So there's a host of things to do with it. I think that eventually, if it holds 4,000, 3,800, you're going to rip back to 5,000 probably in the next year.
I wouldn't get too far from gold, but the truth of the matter is, like, we talk about this being a store of value and a place where you park cash when you have looming concerns about either the U.S. economy or general geopolitics globally. And the speculative nature that we see in all these other high growth, high beta pockets of the market found itself creeping into the gold market. And so naturally, you're going to have some pullbacks and some sideways trading. So I think Carter called the top almost to the date. I think that's great. I think you continue to monitor the technicals. But again, I don't think there's a situation where you should dip completely out of gold. But I would look at perhaps when you reengage, allocating some to copper and some to gold.
Silver also.
Same thing. I mean, now people, and Carter had his chart showing that silver basically topped out exactly where it did historically. And then he showed it adjusted for inflation, nowhere near where it was on a historical basis. But if gold moves the way it did, silver's going to move the same way and probably twice as bad, which is the move we saw. It all, in retrospect, it all makes sense. I didn't think it was happening today. I don't know what the trigger was, but here we are.